Good morning, everyone. Today is January 8th, and it's not even London open, and we see 160 points waterfall from 1800 hour yesterday from that price. Let's have a look at what is happening on a broader picture. So if we look at the weekly chart, we are still in this formation, this accumulation pattern. However, yesterday we have created a top here, smashed through the targets we set out in the morning based on the gamma exposure levels, and you see here it actually went a bit into the squeeze area, taking this candle body high, barely touching it, then going back now down, basically sweeping liquidity above this week candle, previous week candle, and also this week's candle high. So now the market has fueled here liquidity, going back down into the range, and we see now that the market has actually pushed into the bear gamma area. However, this week is not done yet, so we are, what day is it today? It's Thursday. We have today and tomorrow. So what do we see? What can we note about this weekly candle? It has a big wick. It small down wick. It expanded up. It has taken liquidity. So now based on that, we can deduce that if price is being pushed down, it's being pushed down towards the weekly open, but that's pretty much the ultimate target. If this is to become a bearish week, chances that this candle that has started bullish like that becomes a bearish candle are lower than this candle actually finishing as a pin bar. So if I look at what's happening here, we have had this candle smashing through this candle's low here. So that created a change in the state of delivery relative to this formation here. So that's an important level. Now, with that in mind, I have the buy side liquidity here. I have the sell side liquidity here. I can go to a 4-hour chart and let's look at the lower market. But one more thing, we are in bearish territory here in the exposure map. If price indeed falls after taking this level, it will go here. So 25,250. If this falls, then the structure breaks to the downside. We're at probably into this imbalance here, into 24 for 25, but that's a long way in my opinion. For now, let's focus here on this price action. Just for kicks, let's measure what's the difference, what's the middle between this and this. If we measure, and there it is, right? So this area, this level is the middle of this bearish gamma exposure zone, monthly gamma exposure zone, and pretty much aligns with the level we set out here. Let me remove that. Let's go to a 4-hour chart, and in the on the 4-hour chart, we see the levels we've just drawn up. The picture is pretty much clear here as well. The levels we drawn up make a lot more sense now, and I will tell you why. So as you can see, liquidity taken, nice. Change in the state of delivery with inverted fair value gap. This is an opposing candle, excellent price action. Going back into this range, and if we look, let me turn off the gamma exposure levels because it's cleaner. If we look, we have this would be my buy side liquidity. Let me make this, let me change the style here to greenish, and buy side liquidity, and this is my sell side liquidity. Now, yeah, I'm on the 7-hour chart here. No problem. Let's go to a 4-hour chart. I have this imbalance here, this balance price range, and it was retested here, and it shoot up, taking liquidity. Now we have inverted fair value gap, balance price range, inverted fair value gap, going back from external into internal range liquidity, into this, again into this balance price range. If we are to measure here to here, right, this is the equilibrium area into the structure here. Now right, so we have this high volume level. I would rather mark that out with a horizontal line. That's Alt H on the computer keyboard, and let me HVL monthly map. Okay. Now that I've marked that, that's 25,705. 25,705. Okay. What else? Equilibrium, it's on the edge of this imbalance, and if price is to confirm below this HVL line, it will likely make its way all the way into buy side liquidity here. If I'm to if it's inverting this it's inverting the structure here, then it's going to probably invert the entire thing and go up, but slim chances in my opinion. We are going down in the today and tomorrow. So let me turn off this and let's look at where this is in terms of optimal trade entry. So as you can see, yeah, that pretty much aligns. So if price is to retrace here, then go back up into this liquidity here, then as you can see, it makes its way right here into this buy side liquidity, and then that's the play. That's the play probably for the coming week. But for now, intraday, let's look at this CISD. Let's do that. So if I am taking the top here to the CISD level, and let's do fibs. There it is. So your one is here, pretty much arguably around here, right? With 2.5 right down here into this. So let's see if this level falls. If that level falls, it could overshoot into this. But that's further down the line. Let's look at the 7-hour chart as well. So we have had 18-hour candle creating the CISD, but this is not yet finalized. Although this closed, this fair value gap is not yet finalized here. This 7-hour candle, we still have 6 hours and 18 on it. It could just go back up. So with that in mind, let's also mark this level up with the horizontal. Yeah, let's do the trend line. This is the 7-hour. 18-hour. Candle low. If this candle just takes liquidity below this, it will just go back up into the imbalance here, invalidating this change the state of delivery with this being just a liquidity area. So let's see. Maybe that's the play where everyone is enticed into shorts and the market just reverses here, because this is quite obvious, and when stuff is obvious like that, market does whatever. So take that in consideration as well. The bullish scenario would be here if the market reverses above this. Yeah, it's pretty much the CISD line, right? The 7-hour line. Okay, so if this candle, if the 7-hour candle goes back up and closes above this line, we can look for higher prices as well. That's it for now. I won't go on lower. Yeah, let's for the just for a moment. Let's look at the 15. As you can see, this CISD played out. If we are to measure this, there to there, there you go. It reverses on 4 to 4.5 with this high volume level here. Be mindful also of that. We might just get bullish momentum as well. This gets reversed, this gets reversed, this gets reversed, and the market's going to heaven here, right? That's the bullish play. Okay, okie. That's the outlook for today. Stay safe. I don't think this will be an easy day. We haven't had easy days in a while now. So trade safe and take care.